Welcome to Trading Lounge and the US indices. We'll be looking at the S&P and the NASDAQ, and this count here is becoming the sort of primary count now. So wave 4 possibly being completed, but there's just one more little hurdle that we need to overcome, is that the move that's from the low here moving up through to here, once it finishes its 5-wave structure, then we need to see the move back down here in a corrective wave, because it's possible that once this is finished here, that it can continue down here to finish down here, and we'll look at that in a moment. So we talked about this before, but these are the two scenarios that are playing out here. So if wave 4 is in play here, then we can look at 3,000 here and 8,000 for the NASDAQ. So let's sort of dive in and have a look at these two. So from the daily chart here, we can look at this. To bring this in perspective, this is our bullish count here. So in a nutshell, we'll look at this close in more detail, but from this low here to this particular point here, we're looking at a 5-wave structure here in terms of 1 and 2 and 3 and 4 and 5 here. So we expect this to top out in the next session and then have a corrective move here and then a move up. Now the 2650 is the 61.8% retracement level roughly at this stage. We need to get our high in here first, but our long-term strategy for moving higher is to catch this third wave here, even though that we're already long in these sort of spaces here. However, the move back down through here as wave 2 should be sharp and swift as an ABC correction. We do have this trend line across here, and quite a lot of the time when this occurs here is that the correction will play out along the trend line and fail to pull back to the 61.50-60% here. So we need to be mindful of that. So this particular little pattern here, once this top gets in here, we should see some type of move down. And all we need to do is look at this in terms of 3 waves, and from the high to the second bounce here, we just draw a line across here, and as soon as that's breached here, then we can move off from here. And this green line too will also go through. If this, let's just pretend this is the green line here, once this moves down through here, it will also need to work back across it, so it will have its arrival reaction, first high above the level, and then come back and test it and then move off there as well. So that's the way it can move through here, and you can refine that sort of thing. But we'll be looking at wave 2 here as an A and a B and a C, and so forth from that point. Yeah, so there's a couple of interesting points here, but we'll get onto the intraday to do that. Okay, the bearish count for this is this one here, where we have, this is slightly different from before, but it's just a better fit, and we just need to look at it. So from wave 3 here to wave 4 over here as a more complicated corrective pattern, as an A wave to here, A, B, C to here, a C wave in 5 to here for the A wave, a corrective wave for the A, a B, and 5 waves up for the C. And also to the 2750 here is the 61.8% retracement level from wave A. So yeah, anywhere in this space here it can finish and move down. So we do need to be mindful of the correction coming back down through here. But yeah, the other way, of course, is we pull back down into this space and then move up from there. That's the positive side for all of this. Now, all that said, there's just another little point that that's crossed my mind that we need to accommodate as well, and that is that the move up here is that we can see that the trend's expanding. The first leg here is what it is. The third wave here is larger, but we're looking at this one here, which is, is larger than the third wave. It's also increasing in size, and it's still got a little bit more to go in here as well. So it's quite long compared to this one here. So we may need to look at this move up here in a different count as well. So I think I did that on, let me just check, could be the 4 hour, the 2 hour, I'll just check, that is the 4 hour and this 2 hour. Okay, so this is an alternative count that we need to take on board here. So it still counts it as an impulse wave, but just a bigger picture of an impulse wave. So before we had this green wave 1 here, and green wave 2 here, and green wave 3 here, green 4 here, and going up for 5 here, finishing here. But this one here allows for this to be wave 1 and 2 here, then a strong move up here for wave 1 and back for 2, and then this, because this is really playing out not so much the power of it, but the length of it is playing out as a third wave, having a longer journey to the upside. So this is possible here. It may not be the case, but if it is, you know, we need a strategy to play that out. So what we can do, if I can just clean these up here a little bit. So you know, in the other scenario that we have, we've got this here as wave 1 here, haven't we? And we're looking for, you know, blue wave 2 to come back into this space, or to rather to the 2650 down here. So let's just imagine for a moment that we've got this little trend up here. It's still got to play out a little bit further here. Even if it is a wave 4 here, what will happen is that we will end up seeing wave 4 as an A and a B and a C wave, just coming back to the 2700 area here, and then moving off up here. So first of all, we don't need this now because we know what that is. I'll just borrow this here, copy that, so we can put this here, and we just go through the same process again. So instead of looking at a move that's come back down through to this space, the 50-60% mark, then we just look at something that's going to be a little bit more shallower here in terms of a wave 4 here. Okay, so it's not going to make any difference. It's just that I need to point it out because it's something that I discovered, and we need to, yeah, accommodate that as well. We don't want to sort of, you know, we need to look at everything. So yeah, and of course the next important level up here is the 28 here. That's the first minor level at this point here. So that's where we'll be looking for wave 3, and then an ABC for wave 4 here, and then further up from that point in this particular case. So yeah, anyway, we'll take that on board. Just got to save that. Let's have a look, drill into this a little bit further. So in this instance here, we've got our wave 4 down here, and in this case we'll just keep to our standard count at this stage. So we've got wave 1 here, wave 2, wave 3, wave 4, and then we're going up for wave 5 here. So we've been counting these up. We can look at this on the tick chart in a moment, but as I mentioned, it does appear that we have one more little move up to here before we get our A, B and C wave here. We haven't breached this trend line here yet, which is a good sign that oh well, it's not, I mean, yeah, okay, no, I won't go there. I want to complicate it further. So yeah, in a nutshell, we can expect this market to have some type of correction here, and the main point, as I mentioned before, if I can just borrow this one here, once we've got that top in play, it'll just be as simple as putting a line in the sand like that, and then just waiting for either a move from here or a move from here in that particular instance. Let's just go drill in on this one here. I'll just save that. So okay, just on the tick chart here. So we were looking at wave 1 up here, wave 2 here. It's possible that wave 3 is sitting here as well. Let me just investigate that further. 1 and 2 here. 1, 2, 3, 4, 5. 3rd, 4th, and 5th here. Yeah. 1, 2, 1, 2, 3, 4, 5 to here. Still looks like it looks like this is actually over here. But then that leaves us an A and a B and a 1 and 2 and 3 and 4 and 5 here, possibly. But that leaves us one. Let me just check the cash market. 1, 1, 2, 3. It can still move higher. So I mean, I could put this here, and then that would leave us a bit dodgy, but 1 and 2. And that's a bit short to be a third way. Oh no, I suppose it's okay compared to this one here. So 1 and 2 and 3 and 4 and 5 here. It's possible that we've got a top end, but this plays out here as an A, B, and a C wave here. So a B and a C here. So we should, I can't draw on this side of the price, but we should end up going up here further. So what I could say is that, sort of splitting hairs here a little bit, but let's call this, it appears to be corrective, but it's not confirmed yet. Have I got any smaller little guys in here? Just bear with me a second. Just looking for my little blue ones. Some of them are here. So sorry about the background noise. It's just rubbish day here in Blackheath in Blue Mountains. Also had a little bit of our first snow this morning. Just a slight drizzle of snow, which is nice. So a wave 3 here, a wave 4 here, and a wave 5 up here. Now there's a couple of things that I want to just talk about here as well, because you know the reality is that this is trending up nicely, isn't it? So it's okay to call the top in here. We've done our counts and so on here, but I just don't think this is actually quite right. This doesn't feel correct just yet. That's a bit better, but it still doesn't make sense in here. But anyway, still better. So one of the main things here that that I want to chat about is that this is a trend going to the upside. Yes, we are looking for a top. Yes, we are close, but there could be some extra little pushes in there. We know that the 61.8% retracement level is up at the 2750 area here, so that's going to be significant. The other point that I want to make is that is about the trading levels. So we know that we've got 2700, then we've got 1, 2, and 3, which is group 1, isn't it? Then we've got the midpoint. So we know that if we get support on 30 on top of the number 3 here, then we're going to be going up to the number 5 here. So we could say that this sort of here is not quite the arrival here, but it's pretty close. So we could say it's the arrival, just at 72 and 272. When you get 272 or 277 or 772, it plays out quite strongly at those numbers when you get a group of 2s and 7s together, part of the 72 number, or really the 2 and the 7 is the 9, and they say the 9ness of it all in mathematics if you're on that side of the scale. So this move here would be the arrival, the reaction, then the first high above the level. So we're expecting, you know, a wave to move up into here. So that would be the first high above the level, and then there'll be the correction that we're looking for. Now, the correction that we're looking for is to head on down here further, down into this space here further. But if at any stage the top here gets taken out, or we get a nice tested support on top of the 30, then you have to trade up to the 50, and then the same thing will occur here as well. So you need to understand that, and you need to stay with the you need to trade what you see at the time. And the levels are, Elliott Wave is fantastic for getting the direction of the market, The trading levels or support and resistance at certain price points is also just as important as well for your trade setups as such. So in this trade setup here, I know that if I got support on top of this number here now after this, then we can go long, but also the safe trade here would be looking to take that top out here as such for a move up into that space, because a move up from there would, a move above here would make this here the A wave, the B wave in 3 and the C wave here. You could also just take this top out here if you wanted to and go that way as well and leave the stop under here. A bit more high risk. The other way to wait is for this to play out here, just shooting the breeze here. It'll move up here, it'll move back here. So this will eventually find support in here, and then not taking that one, but taking this one over here once it develops support here, and then move up at that point. So you need to work with all of that. So that's enough on that. I just want to have a look at the NASDAQ as well. So same pattern, but even a little bit more bullish, because well, this can be bullish in a couple of different ways. We've got our triangle pattern, that's cool, but it's also possible, as I mentioned before, I thought that I had it still there. It's also possible to have wave 4 sitting over here on this one here, and possible to have this as wave 1 in orange, and wave 2 here, then wave 1 here, wave 2 here, and then into the third wave here. But I'm taking a more of a conservative look, and we're going to call it a triangle for the time being, but we'll be aware of that situation, and our target is the 8,000 up here, and this is the medium level here at 65. And I know from trading stocks and these working with numbers before, if you get support here, you know, this is a continuation pattern, a correction here. So this is where we're looking up here. There's certain points up here that will be, you know, dominant within all of this. So 6/8's important, the 7's important, 7,000's important here, of course. The 7,200 here is important. The 7,300, the top of group 1's important, the 5's important, the 8's important. These are places where corrections are going to play out, but the 6,500 and the 8,000 are the big kahunas in this chart here. So yeah, there's different ways we can count this start here, but it doesn't matter for the beginning here. So let's just have a look at this on an intraday basis. Okay, this is a 4-hour chart here, and with this here, you know, I just want to be open-minded. We can have wave 4 here. This can be counted as wave 1 up here, because I can count this as 1 and 2 here, and then 1 and 2 and 3 and 4 and 5, and here for the third, back for the fourth, and I can see 5 waves up here. So it's doable. So we just need to note it, because what will happen is that when we get way up the top up here in closer to 8,000, then we may have an extra wave, and we'll know where it come from in this particular instance, because we've mulled this over here. But in the instance, we can call this wave E of wave 4, and we can look at this as wave 1 here, an A and a B and a C for wave 2. So this is slightly different from the S&P 500. Okay, so in this instance here, it would make sense to have this as wave 1, A, B, C for wave 2, and then 1 and 2 and 3 and 4 and 5 up here for the third wave. Now we're hitting 7,000, so you can expect a correction. So it's logical that we're going to be looking at wave 4. If you want to take a profit, then 7,000 is where to do it. If you want to take part profit and leave some skin in the game, so you're still connected, you still have a relationship with the market, it makes it a little bit easier. And then just pretty much, we can look at the pullback once we get here, or the pattern at 7,000 here. So really at a level, there's not a lot that can happen at a level. So first of all is that, sure, the market there's things that can catch us out, where the market just continues to go straight through the level. There's the fact that the market can come to the level and fade from there and never come back. So that's possible. But in most cases, you'll have the arrival, the reaction, the first high above the level, and then you'll have a corrective pattern here, which is a classic trading levels pattern, and you'll move off from that way. The variation on that is that you'll get to here, you'll have a reaction here, you have the first high above the level, the ABC pattern will fit in on top of the level here, and we'll go straight up from there. But as always, we'll have our second high here, and we'll be long from that point there. So this happens most of the time. This is less of the time, but there. And the third one that comes into play is that, let's draw it here, is the overshoot pattern, where it doesn't stop here, but the distance that goes above is the distance that goes below. It comes back below again as a general rule of thumb. And then it kind of does its little, it's sort of like it just diminishes into this particular, into the 7,000 here, into that particular number here in its own little way, and moves off. You'll just see it diminishing, they're being pulled like a magnet into this number here. And yes, it's kind of a triangle pattern, but it could be 1 and 2 and 1 and 2, or it could be all sorts of patterns. So, but just knowing these three patterns here, this is the most common, second common, and then the third common here, the overshoot pattern. So yeah, normally one of those sorts of things. So it makes it a little bit easier. This can also be counted differently as well. This can also be counted as wave 1 and 2 here in blue, and then the next smaller degree of wave 1 up here in green. So when I go to, not that it makes a lot of difference, but I think it's important that we, in the video, is to look at all the possible counts there are, and then eliminate them one by one and come up with strategies so we don't miss too much, you know. So in this case here, we can look at this as wave 1 here and wave 2 here, and then 1 and 2 and 3 and 4, and then moving up into wave 5 here. So this is going to move up here in line with the other market, and we can expect 7,000 to be the magnet to pull the price up there, and then we can expect a correction there. So we'll look at the correction once it gets there. In the meantime here, you can see that obviously 6,900 is important, and then 7,000. So the next important number in there, the second strongest number, is number 5. So it's the midpoint here. So if you're trading here, then you want that 50, the midpoint, as support. You know that you'll have trouble at group 2, which is 65, 72, and 80 in here, leaving the target at 7,000. Alrighty. Thanks for tuning in. Appreciate it, and enjoy the weekend. Cheers.